We should start to get some more significant economic data points out this week. The last week was a holiday shortened US Thanksgiving week, and we got some more significant data. So it's definitely worth looking at some of these data points for this week. It starts quiet for Monday. There isn't really much significant data there. Similarly for Tuesday, we got some central bank speakers, but there isn't a whole lot to look at. The first thing we will be looking at is US consumer confidence. Getting a sense of how that US consumer is doing is always going to be important, and we could see a short term opportunity in the dollar here. If this comes in significantly higher than market's expectations of 107, then you could expect some of that recent dollar weakness to unwind. So, a short term sudden spike higher in the dollar on a high print would be a decent opportunity, and look to trade the dollar with some other currency which is weaker on the session. So look closer to the session, find a weaker currency, and then I would look to pair that with the dollar if we see a higher than expected print. But bear in mind that we've got the PCE data, the Fed's preferred measure of inflation, later in the week. So it would only be a short term trading opportunity. Similarly, with the Fed speakers, we're just looking for any sign of a rate cut would be very likely to send the dollar even lower and equity markets even higher. So keep an eye on that. Most significant data for the first part of the week, this monthly CPI print. Now, this comes just before the RBNZ interest rate decision as well. So there could be an Aussie New Zealand dollar opportunity here. So first of all, let's look at the monthly CPI indicator with Australia. If we just take a look at Australian data, what you can see is that CPI indicator is expected to come into that just another drop lower, a fall from that 5.6 down to 5.2. So what markets are expecting is this sort of downtrend that we've had since the start of the year to continue. So obviously, if this picks up that direction, that would be in contradiction to the RBA's hopes, and it would be meaning that the latest inflation print, the trim mean coming at 5.2%, double the RBA's target, core coming in at coming in at 5.2%. So inflation is problematic in Australia. RBA's Bullock has said that restrictive monetary policy is the right path for the RBA as long as this remains the case. So, if we see a high inflationary print, that should support the Aussie dollar. So if it comes in at 5.4%, in particular, if it comes in higher than the prior, anything 5.6, 5.7%, then look for significant Australian dollar upside. That is in line with the recent sentiment and could help some of the recent shorts to unwind even further. So Aussie dollar strength on a high print, well worth looking at. If we saw it coming in well below market's minimum expectations, you'd also expect a little bit of weakness in the Australian dollar. RBNZ interest decision coming up as well. Now, not much really expected here. If you look at the RBNZ, we've been expecting this sort of higher for longer rate narrative for a while. 5.5% expected to stay at or around that kind of levels, to at least the summer of next year, according to short-term interest rate markets. You can see, look, flat expectations. We've had little in the way of data to change the consensus of a on hold meeting. 95% chance of interest rate markets not changing. So there isn't, there's not really much to expect for this RBNZ interest rate decision. Forward guidance will obviously be important. The only thing that I would say is there is some chat I've read that potentially the New Zealand government change could end up boosting the New Zealand dollar. So just watch out for any of those kind of optimistic, sort of themes coming through the RBNZ interest rate decision. It is an outside risk that's definitely worth looking at. The other thing that's worth looking at for the RBNZ is the CSI differentials. Now, if you look at these Aussie New Zealand dollar, you can just see a nice little divergence taking place, which could be an opportunity for the Aussie New Zealand dollar. Where are we? Let's have a look here. Yeah, just see that the City Economic Surprise Index is sort of pushing higher, even as the Aussie New Zealand dollar is sort of pushing a bit lower. So, it wouldn't be a massive surprise if the RBNZ takes a sort of more dovish outlook. If they, sort of express satisfaction with where things are, and it's sort of a more you could see a little bit of Aussie New Zealand dollar upside bias, particularly if we see a surprise boost in that CPI print. So look out for Aussie New Zealand dollar opportunities. Otherwise, it's all about the forward guidance. And to be honest, if we're looking at how the markets interpret the decision early in the European session, is most likely to provide a tradable opportunity, because at the moment there isn't much to really go on. Then we go through the rest of the day on Wednesday. Got some German inflation data. Preliminary data for Germany can be important. So obviously, if we start to see big surprises to the upside, look for euro gains. Big surprises to the downside, euro weakness. And German's data is very important for the general eurozone as a whole. Going through to Thursday, got some Chinese PMI prints. Now, there's been some more positive optimism over China last sort of couple of weeks. There's news about these unsecured loans for builders in China. China's government advisors, they were sort of saying that 2024 GDP between 4.5% and 5.5%, with support and stimulus assumed in that calculation. So there's a kind of a bias towards positivity for China. So that means any big disappointments, if it comes in below the low of 49 and we start to see more deep contraction from the recent pickup, if that goes back to sort of more contractionary themes, then that's more negative for risk. So Aussie dollar downside. But if it's very strong, well above 50.2, and risk is also positive, then you could look for that really continue to supporting the Aussie dollar moving forward. Eurozone inflation data. Now, this is going to be important in terms of ECB expectations. At the moment, expectations of the ECB's on hold, won't need to hike interest rates anymore, and there's a weak stagflationary environment looming for the Eurozone. Now, if we see a high print here, core coming in above 4.3, year on year coming in above 3.3, and we see a big boost in inflation readings, then look for upside in the euro. And you can look for upside in the euro against a weaker currency of the day. So euro US dollar in the current environment would be ideal, but obviously check back around Thursday to see if there's any sort of obvious weaker currency. But at the moment, euro US dollar upside on a high inflation print would be super. Only be a short-term opportunity though, because we've got US PCE print, the most important data point of the week. Before then, it's just worth looking at the Canadian data. Now, we saw last week a little surprise move in the CAD. Now, part of that was, so we had Governor sort of Macklem sort of hinting that it could be the last interest rate hike done from the Bank of Canada. And then we had this sort of stronger than expected retail sales print. And that gave the CAD, if you remember, quite a nice boost on Friday. It was a little bit of a surprise. It certainly caught me out. Now, it was either market sort of pushing back against the narrative from Governor Macklem, or just lower liquidity and there wasn't much going on, and so the CAD enjoyed a little bit of extra strength. I'm in two minds, but learning from that, it does mean don't ignore the CAD data that we have out this week. So once again, if this Canadian data, the way I'm going to look at this is, if this Canadian data comes in much firmer than markets are expecting. Now, if it comes in much higher and we see average weekly earnings up, that's inflationary, GDP growth coming in above 0.5%, anything that's, if this on aggregate surprises to the upside, I'd look for CAD strength. And again, you could look for US dollar CAD downside. That makes sense. And that makes sense with risk reversals as well. Take a look at the risk reversals. We can see US dollar CAD is pushing quite significantly to the downside still. You see put option market seeing lower prices for the dollar CAD. So dollar CAD weakness on a strong print is definitely worth looking at. Now, the most anticipated data is the PCE print. This is the Fed's preferred measure of inflation. So we had that weak CPI print recently, and you can see it here. This was it. CPI print coming in weaker than expected, 14th of November. If we just go back here, look at 14th of November, you see that very weak CPI print. 4%, 3.2%, everything's okay. Fed is looking at hitting its 2% target. Hooray, hooray. Everyone gets very excited. And that's why we saw that weakness in the dollar. That's been supporting gold upside. It's been supporting equity markets higher. Now, this is when the test is, how true is that narrative? So this is the most exciting economic data point for me. And what I'm looking for is an out of consensus print. If it comes in out of consensus below 3.4% for the year on year, if it comes in below 0.1% for the month on month, and if the headline comes in, anything lower than 3.1 or 3% with the others missing, then I'd look for dollar weakness. Okay, so gold upside, be fine. S&P 500 upside, that would be fine. Anything against the dollar would be fine as well, depending on what we've had with the RBNZ and the RBA. Maybe Aussie US dollar upside might be ideal. So look at that nearer the time, but a big out of consensus print, US dollar weakness, but equally a very strong print to the upside. If we start getting 3.6% plus 0.3% year on year, going up above 3.1, heading towards 3.4, or even up towards 3.4, then it'll be a rethink of the narrative. The markets would be like, we've been selling, we've been buying bonds again, we've been selling the dollar in a mistake, so we have to reverse that position. So you'd suddenly see dollar upside. So watch out for dollar strength and out of consensus print to the upside. Gold selling would be a obvious short-term opportunity. We're seeing gold moving back in line with bond and yields, so I'm feeling more confident to start looking at that myself. But remember the geopolitical risk with Hamas and Israel. So if that risk rises, then we can see gold having that geopolitical driver as well. And in the short-term panic of it all, that eclipses the bond and the dollar narrative for gold. So say, for example, we have, sadly, and I hope we don't, but say we have more geopolitical risk with Hamas and Israel, and the whole hostage situation flares up. We suddenly see a big bid come into gold. Then don't trade gold over the PCE print. Instead, just look at the dollar. So you go by the dollar index long or Euro US dollar short. That would be the go-to option. Then, as we head into the end of the week, got some more PMI data prints with China. Same way of understanding that as the previous ones. This is the private data. Canadian jobs data, exactly the same. Strong jobs data will be seen as inflationary, CAD upside. Weak jobs data will be seen as deflationary, CAD downside. Both opportunities are there. And we've got some ISM prints for the dollar on the 1st of December. Again, this will interpret this a little bit in light of what happens with the PCE print. But again, if we start to see the ISM data in line with wherever the PCE went, then we could see a further extension of Thursday's move. So, got the French final data out for the PMI. Shouldn't see much there because it's the final data. So shouldn't be much in the Friday morning. Really getting together with that CAD data looks a bit better than the ISM data later on. And then got Powell speaking at the end of the day. So that could be the cherry on the top, the final opportunity, depending on what Powell says. And he's obviously going to be commenting on the consumer confidence and the PCE kind of data we've got. That's going to be influencing him to end the week. So it is an interesting week. It gets more interesting from the second half of the week, and there are short-term opportunities most likely to be available here. So hopefully it will be back to business as normal.